Hey guys, what's up? So I just recently bought $10,000 worth of a stock. There are tons of stocks that are trading at crazy valuations in today's markets, but I feel that this particular stock is a great deal right now. Nowadays, it seems like almost every stock is going up in value, which makes it a little bit harder to find good deals out there, but I believe that this stock has tons of potential ahead and is being highly disrespected by Wall Street and analysts out there. So in today's video, I will share with you guys exactly why I bought $10,000 worth of this stock. I also want to talk about some recent news within this company about them laying off some of their employees. And lastly, I want to go over why this stock has tons of growth potential ahead and can potentially double to 5x and maybe even more than that. I've seen people online talking about how bad this stock is and how the company is going to go bankrupt and how the stock price is going to crash, basically just bad-mouthing the company altogether. But the stock has performed well for me so far, considering I'm up over 15% on this stock alone. A lot of people think that I don't know what I'm doing, and I've seen some negative comments about how I'm a bad investor and don't know what to look for in a company. Probably just some haters that bought GameStop stock at almost $500 and are down bad right now. Anyways, make sure you guys hit that like button if you are enjoying this video. It really helps me to continue making content like this. And without further ado, let's get into it. So first off, I bought $10,000 of a company called Dropbox. I've been buying this stock since last August when it was below $20 per share, and over the past few months, I've continued to add to my position. As of today, I have over $10,000 worth of this stock. Honestly, I absolutely love this stock. Not as much as something like a Tesla stock. That company has made me a lot of money, but I'm actually going to continue to buy shares of Dropbox, and later in this video, I will talk about exactly what prices I will keep buying this stock at. Dropbox is a company that I can see myself buying another $10,000 or $15,000 worth of stock over the next coming months. Keep in mind, this isn't a stock like a DocuSign or a Slack or something that has had a crazy run up recently. Dropbox is still a company that is highly undervalued in my opinion. Looking at Dropbox, this stock is trading below $25 per share and has a forward price to earnings ratio of 24. Keep in mind, this is a growth stock that is trading at this low of a PE ratio in these market conditions. It really boggles my mind that a company with this much potential in this type of market is trading at such a low of a forward price to earnings ratio. Honestly, there's no other way to put it than just flat out disrespect for this company at its current price. But then again, as intelligent investors, this stock is an opportunity to take advantage of while others are overlooking it. Dropbox is also a company that is a buyout candidate. We saw how Salesforce is working to buy Slack, which caused Slack stock to jump like crazy. I hope Dropbox does not get bought out because this company has so much more potential to grow on its own instead of getting bought out by a bigger company. And not to mention that Dropbox has an awesome balance sheet. This is one of the few stocks that is highly unlikely to lose something like 50 or maybe even 60% of its value. It has smaller risk compared to most other stocks out there. I mean, at the end of the day, anything could happen in the stock market, but it's very unlikely that this stock will have big drops. So I'm seeing this stock for under $25 today, and I just had to pick up some more shares. It only makes sense to me. I had some cash sitting in my bank account, and I asked myself if I would rather have another $10,000 invested into a stock that can potentially double, if not more, or just have that cash sitting in a bank account not really doing much, especially since this stock has sold off since it first went public and is sitting near all-time lows all the way down from $43. It just makes sense to buy more of this stock at these current price valuations. The next thing I want to jump into about the company is them recently laying off some of their employees. I just want to say that layoffs are not a bad thing. It doesn't mean that the company is in trouble because they've had to fire some of their employees. It's just part of corporate everyday life and it's completely normal. And for example, I remember that back in like 2018, 2019, investors were worried because Tesla had to lay off some of their employees. And many people thought that the stock was doomed or that they were about to go bankrupt. And no, the stock has gone up over 2,500% in the past couple of years. Dropbox is laying off a total of 315 employees, or 11% of its workforce. These layoffs come as the company seeks to better focus on its growth plans in 2021. Employees will still receive benefits after leaving the company, and the company says that remote work has taken precedent, and that means it needs less staff to run in-office operations. This will help save Dropbox a lot of money by having their employees work remotely from home instead of an office. And to be quite frank, these big companies lay off some of their workers to get rid of some of their least efficient employees. It's highly unlikely that they're getting rid of their best workers. It wouldn't make sense. Basically, they use these layoffs to cut off some dead weight that can be holding the company back. This just goes to show you that layoffs are sometimes necessary to help a company succeed in the future. It helps keep costs down, and they have to happen. It doesn't mean that your company or stock is doomed. And this is something you have to do. I always think about, okay, what's the risk to reward ratio of this company? And when looking at this stock, there is minimum downside risk. Unlike some other companies that depend on one company for a majority of their revenue, Dropbox is not like that at all. It's a recurring revenue business where customers are on monthly or yearly subscription for their cloud services. They have consistently money coming in from a bunch of revenue sources. And not to mention that the company has tons of cash on hand, so the risk of them going bankrupt is highly unlikely. They're very financially responsible. There is minimal risk in this stock, and it's unlikely that the company will go into a period where their business and revenues are declining. People will continue to need more and more cloud storage and cloud services in the future. This is where Dropbox has an opportunity to capitalize and put their customers on more expensive subscription plans. Look guys, just think about this for a second. The upside potential for this company is definitely there. They have a low forward price to earnings ratio, which is hard to come by for a high growth stock in these market conditions. Keep in mind that this company is going to be saving a lot of money in the future. They're going to continue to grow, and they have a very stable business model. And we do have to remember that this company has the possibility of getting bought out, which I hope doesn't happen, but it's very possible. Dropbox is in the right business for the type of economy we are transitioning towards. They're in cloud, and they own HelloSign, which can be a big player for the e-signing of documents. These two types of factors will definitely help Dropbox sell more of its products. They are a work from home company, and Dropbox is transitioning to a full remote work environment where their employees can work from home. With everything going on in the world today and thinking about the future, I'm not sure if things will go back to 100% like they were before, where workers are all in an office space together. I feel that eventually most companies will transition to a remote work environment altogether. Just think about this for a second. Dropbox making the transition to where their employees are working remotely will allow them to be ahead of the game in creating products and services that they can sell to other people and companies that will allow them to work efficiently in a remote work environment. In my opinion, the upside potential for Dropbox is huge. And lastly, for my price outlooks on this company, personally, I will continue to buy this stock heavy under $25 per share. At $30 per share, I think that would still be a good deal for where this stock can go in the future. And I really wish I could still buy this stock for under $20 like I did a few months back. But if it goes anywhere near those prices again, I will be sure to pick up a lot of shares. Let me know what you guys think about this company stock in the comment section down below, and make sure to hit that like button as well as subscribe to the channel to see more videos like this in the future. I have so much content planned out for this year, and I look forward to sharing it with all of you. Thanks for watching, and I will see you guys in the next one. Peace.